Hello, traders worldwide. If you're actually just joining this session, my name is Emmanuel Degareva, popularly known as MJ Crypto. So I'm going to be your host and your coach during the course of this membership program, which I believe you're actually here for, and I know you're in quest of knowledge. Now, one of the basic things that every crypto trader actually wants to know is when do I buy and when do I sell? I get this question like every single time. MJ, when do I buy? What coins do I buy? When do I sell? Now, there are four scenarios that will actually play out in the market. Okay, before I actually proceed and showing you all of these things in a nutshell, there are four scenarios that will play out and that you should be very, very particular with. When to buy, when to sell, when to be patient, and the fourth one, which is very important, in fact, is the most important amongst all. Should I tell you? When to avoid the market. Yes. And sometimes when you need to avoid the market and you shouldn't be taking trades at all. As a trader, I've been trading for over 4 years now, for apparently 5 years now, currently. Okay, so I can categorically tell you that trading is fun when you know and approach it the right way. Now, what is the right way to approach trading? And what is the strategy that works? Now, we have tons of strategies everywhere, but the key strategy that I'm going to be showing you in the course of this membership program is the only trading strategy that works. The approach to making consistent profit in the market. There's one thing to be making profit, and there's another thing to consistently become profitable. So to become consistently profitable, in 14 days, to become a pro trader in 14 days, actually, these are the steps I'm going to be showing you in this mentorship or rather membership program. Basic technical analysis. Now, what is basic technical analysis? This is you understanding that candlesticks, chart patterns, support and resistance, all of these things play a crucial point in understanding the direction of the market. Because as a trader, your duty is to try and predict what the market will do as a basic retail trader. But I do not predict. I trade alongside the institutions. And that is the third phase here, which we have as institutional trading system. Now, under the basic technical analysis program, which you'll be undergoing in the course of this membership program, you're going to learn a lot of things. Trust me, you're going to learn a lot of things. You're going to learn basically what makes you a successful trader. That's one. Two, you're going to understand the concept of bulls and bears. All right, you're going to understand the concept of bulls and bears. What is a bullish market? What is a bearish market? Support and resistance. You're going to learn that. You're going to learn candlestick formations. Okay, you're going to learn that. You're going to learn types of candlesticks. We have different types of candlesticks. We have a lot of them. We have so many of them, right? We have the hammer, the marabuzu, the spinning top, harami, doji, bullish and bearish engulfing, as many as they are. You're going to be learning that. And of course, you're going to be learning market structure. The market has a structure. Okay, the market itself has a structure. You're going to be learning when we have an uptrend and when we have a downtrend. You're going to be learning all of these things. And it's very particular in market structure. This is just the preamble. I'm just showing you what exactly I'm going to be showing you in the course of this training. All right, that's for basic technical analysis. So you see, it's very well packed. It's actually very, very well packed. And you're also going to be learning chart patterns. What kinds of chart patterns? So when you see your chart on TradingView, you should be able to decipher what sort of chart pattern is it. Is it an ascending triangle? Is it a flag? Is it a bullish or bearish flag? Is it a pennant? Is it a wedge? All of these things you're going to understand and learn them because You need them to be able to predict what the market will do. I get these questions all the time. MJ, what will BTC do? And I keep laughing. All right. So you need all of these things to be able to predict where the market is headed. Now, when you are done with the basic technical analysis, that is the foundation. Okay. Knowing support and resistance, being able to draw it perfectly, that's the basics of technical analysis. Now, knowing all of these things that I've just mentioned, right? Now, good. The next we'll now go to, we'll take it a step further, and then we're going to what? Understand top-down analysis. Top-down analysis. Yes, we're going to understand top-down what? Analysis. Now, what is top-down analysis? It's very simple. It's an approach. Remember, I told you guys something that to become profitable, you need to approach the market the right way. Now, top-down analysis is you understanding that there is what we call a higher time frame. Now, you can look at the market from different time frames, from the 5 minutes perspective, from the 15 minutes perspective, from the 10 minutes perspective, from the 1 hour, 4 hours, daily, weekly, monthly. Now, when you go into the weekly time frame, it is a very clear time frame that shows you the directional bias of where the market is headed. Now, knowing where the market is headed is solving complexities over 80%. You solve your complexity over 80% because you already know this is where the market is going to. Now, all I need to do is position myself and trade alongside the momentum of the market. If the momentum of the market is going bullish, all you have to do is go bullish. If the momentum of the market is going bearish, all you have to do is what? Go bearish. Very simple. That's for top-down analysis. Now, I'm going to give you a typical example. If I give you a bowl of oranges, 10 oranges, and I put them in the bowl right in front of you, and I tell you to count them and pick them, it's going to be very easy for you to count them because you are seeing it right in front of you, right? Now, if I push that basket of oranges 2 kilometers away from you, I can bet that a lot of you would not be able to see clearly what are in the basket, how many oranges we have in the basket. You won't be able to count them because it's far apart. You are seeing it as oranges though, but you may not be able to count how many oranges are in the basket. Now, that is how time frame works. When you go into the higher time frame, the picture becomes very clear for you to see. And don't forget, price respects the higher time frames. Now, what are the higher time frames? Don't worry, you're going to find out in the course of this training. But I'll give you an expo. One of the key time frames you should be looking at before making your analysis is the weekly time frame. Go into the weekly, then you scale down to the daily, to the 4 hours, to the 15 minutes. Listen, my students who have been making profits from these things can testify. They can tell you for a fact that this actually is the only strategy that works out there. All right, it's the only strategy that works out there. Now, top-down analysis, when we're done with that, you're gonna be going deeper into institutional trading system. Now, here is where it becomes more juicier. Okay, it becomes juicier rather. Okay. Institutional trading system enables you to what? Decipher where the whales or banks are placing their trades. It shows you the liquidity in the market. The whales are usually found in the crypto space. Then the banks, central banks, hedge funds, these are guys that trade the Forex market. Now, you can use this system both on crypto and on Forex. You can use these systems. It works on both sides. It works on what? On both sides, guys. It works on both sides. Now, when you've done this, trust me, let me just show you something on my screen right now. Now, this is what we call the AMD model. It's called accumulation, manipulation, distribution. Now, typically, what price does, price creates a range at all times before moving towards a direction. Price must constrict before it expands. Now, in the form of this constriction, this is where the institutional traders, so-called whales, and the so-called banks accumulate their orders. Now, when price begins to range like this is where it becomes interesting. Okay? All you have to do is wait for a breakdown or a breakout out of that range and a follow-up back into the range. You can see price is ranging, right? And all of a sudden it breaks down, goes back into the range, retests the support, and then flies up. These are what schematics that will guide you on how to trade or when to trade. Remember, there are 4 scenarios: when to buy, when to sell, when to be patient, and of course, when to avoid. All right, so I've just given you a clear example of what is inside institutional what trading system. Complete SMC made easy course. The breakdown is right here in front of you. Listen, guys, this membership course is not something you want to joke with. Okay, it's not something you want to joke with. This can scale you up from 0 to what 100 real quick. Okay, it can scale you from 0 to 100 real quick. And what's the cost implication for this amazing membership program you're about to embark on? It's just 49 USDT, $49, and you're already a part of this amazing trading system. $49. Listen, guys, there's a student of mine that actually said something that baffled me. He said, look, MJ, since I got into your session, look, I don't longer use my tools to draw support and resistance. I just look at it and I'm able to see the areas of rejection, the key areas of rejection. I'm going to be showing you a typical example of how to do that right now. I'm going to show you. It's going to show you right now. Now, I want to draw my support and resistance right now. These are our key level, which we call the range. Now, a lot of you may be asking, support and resistance, is it a line? It's not a line. It's actually a zone touching the key areas, right, of rejection. Now, the reason I didn't take this double bottom is because I'm already seeing that there's a form of recovery going on here. And this is looking more like price wants to go back to this resistance. So I'm not taking it here as a support. I'm not taking this level as a support. I'd rather take this level. As my support. That means all of these areas here were just fake outs. Fake out, price came down, broke down, fake out, and then price is about to go back to hit this resistance level right there. So you can see it's actually very clear. This is Forex Euro JPY, and I'm currently even on this trade right now as we speak. So you can see it's actually a very simple, it's actually a very, very, very easy way of trading. So when you learn with me, you get to understand all of these things from point A to point Z. And trust me, there's no way you can be profitable. You must become profitable when you trade with MJ Crypto. Listen, guys, this is no play. This is no jokes. This is real life. All right? Real life that I'm showing you right now. So what are you waiting for? I'm going to see you all on the inside. Send a DM. The link is in the description of this video right in front of you. Send a DM. Just click on the link and get into this seminar, get into this program. It's a life-changing opportunity. Cheers. I'm going to see you all in the inside.